Thank you, and it's a great pleasure to be here at the KCCI to speak to you. I will speak about India's digital transformation, a journey of the last 15 years, and why it's important to India and to the world. Now, today many countries in the world are facing a balance of payment crisis because of not enough, especially in the emerging market, and they're running out of foreign exchange because of high interest rates and so on. But India is actually in a very comfortable position because it has more than $600 billion of reserves. And that's all because of technology and the exports and so on. So I'll come back to that. So this really makes India an outlier in the space of emerging countries. Also, in a matter of 9 years, India was able to transform its banking sector. 9 years back, only 20% of Indians had a bank account. So the financial inclusion was very low. In 9 years, the number of people with a bank account has gone from 20% to 80%. Now, normally in any country, this would have taken 47 years. But by using technology, and I'll explain how the technology was used, India was able to accelerate financial inclusion so that more and more people could have a bank account. And now we have 80% penetration of bank accounts. So this was like a leapfrog in terms of traditional development by the use of technology. Similarly, today India is among the cheapest data rates in the world. We have many mobile operators. Of course, Samsung is one of the top mobile phone companies in India. And thanks to dramatic innovation and competition in the mobile market, the prices of data fell dramatically in about 2016. And as the prices of data fell and smartphones became more available, India now has 66% penetration of smartphones. So in a very short time, India put in place a network. This happened because before this, we had 2G and 3G networks, and we had existing mobile companies. But in 2016, Reliance Jio, which was a company from the Reliance Group, which is one of the largest business houses in India, invested $25 to $40 billion in creating a modern 4G data network. And they launched that in 2016. And they again used the digital infrastructure to get clients. So today, India has 700 million smartphones, among the world's lowest data prices, and huge infrastructure for digital. And then in 2016, India had no digital payment systems. A few people used cards and so on, but we did not have digital payment systems. And in 6 years, it's become the highest volume of digital payments in the world. So a new payment system was launched in 2016 called as the UPI, Unified Payment Interface. And this payment system went from nothing. Today, it does about 9 billion transactions a month. About 350 million people use UPI. And there are 50 million merchants where UPI payments can be made with a QR code. And it is a big use of digital payments. 40% of digital payments in India today happen because of UPI. So you can see that a lot of changes have happened very quickly. And then India was able to deliver 2.15 billion vaccine doses in just 2 years. India has a population of 1.3 to 1.4 billion people, and India had to vaccinate all of them twice and then booster dose and all that. One advantage we had was that it's also a vaccine manufacturing base. So there are many, many companies like Serum Institute who made the AstraZeneca vaccine, and they produced for the world, so there was a lot of production. We also have a good healthcare system to actually do the actual vaccination, both health and private. But also there was a digital backbone to this. So the entire vaccination information was done through a national platform called CoWIN. So wherever you are in the country, you enrolled, or you got your vaccination done through this application. And once you got vaccinated, you got an instant real-time digital certificate, which you could keep on your phone or on the cloud or print it out. And this infrastructure allowed India to scale up vaccination and do 2 billion vaccinations in just 2 years. So that's one of the best examples of how we could do that. So why I'm saying all this, they're all examples of how digital transformation at the scale of a population, it's possible to implement very quickly. So what this is saying is that what's happening in India is it is making a series of changes. These are not reversible, they're moving forward. And we call them as non-linear because it's not about 5% growth a year. It's about some new idea coming and very quickly becoming very large. So we think of this as irreversible, non-linear change. And each change adds to the other. So it's all adding up. And because of the layers and layers of this, all of this can combine and create new innovation. So we call this as combinatorial innovation. For example, I talked to you briefly about financial inclusion and mobile penetration. Both happened because of the ability to onboard a customer very quickly using an electronic Know Your Customer, eKYC. In other words, you could verify a customer online in 1 minute. And the reason you could do that was based on the ID system that was referred to earlier. And every Indian has a digital ID, which enables you to do an online verification. And then online, you can open a bank account or get a mobile connection. So on the banking side, you can see the increase in benefits transferred to bank accounts. And on the mobile side, as I explained, you can see the number of mobile phones. So both banking inclusion and mobile inclusion happened thanks to the Aadhaar-based eKYC or Know Your Customer, which in turn was possible because every Indian had a digital ID called Aadhaar. So it's all connected. Digital ID, banking, mobile. Now, also, we had come to the conclusion that India needed a different kind of a digital infrastructure. If you saw what happened in the West, the internet did not really have a payment system. So the business model of the internet was advertising. Because a country like the US spends $862 per person on advertising. So there's hundreds and billions of dollars of advertising revenue. And so when the early internet companies came, they started doing digital advertising, and the revenue moved from print and television to the internet, which led to the rise of global companies like Google and Facebook and so on. But India's advertising revenue is very low. It's only $7 per person. So India could not have built an internet economy on advertising. So it had to have a different model. And that was the ability to do small value transactions on the internet. What you can think of as microtransactions. And that's why UPI is very important, because UPI enabled the country to do billions and billions of small value transactions. So the Indian internet economy is transaction based and not advertising based. So you have to understand how it's different from the way it evolved in the West. Now, all this was enabled by what we call as digital public infrastructure, which means it was infrastructure enabled by the state, enabled by the government, not necessarily run by the government, but enabled by the government. It was designed at population scale, which means this infrastructure had to be accessible to 1.4 billion people. It had to be very low cost so that it met the income levels of the people. It couldn't be a high cost, it had to be a very low cost. It had to have very small value transactions because people cannot, say, afford to pay large amounts of money. So you have to have a high volume. So you need a digital infrastructure which has a high volume, low cost, small value at population scale. And what India has done is built this for identity with Aadhaar, with payments, with UPI and so on, and now with data. And all these are interoperable. They're all designed to talk to each other. So over time, you have a very sophisticated national level infrastructure which everybody can use. And this whole thing is called as the India Stack. The technology is called as India Stack. Now, the first thing in that is Aadhaar. Aadhaar is a 12-digit number which uniquely identifies a person. This project was done under my leadership. In 2009, to give you some background, I'm a co-founder and chairman of Infosys. So I worked in Infosys from 1981 to 2009. And in 2009, I was invited by then Prime Minister Dr. Manmohan Singh to join the government in the rank of a cabinet minister. So I left my role at Infosys and joined the government and was the chairman of the entity called Unique Identification Authority of India, which issued the Aadhaar number. And I served for 5 years in the government till March 2014, and I had made a commitment that by the time I stepped down, we'll issue 600 million digital IDs, which I did, and subsequently the ID project was taken forward by Prime Minister Modi and his team, and today 1.3 billion people have the digital ID. The digital ID provides for online authentication. All the ID does is say, Kim is Kim, or John is John, or Ashok is Ashok, or Rafi is Rafi. It is not a citizenship ID. It's an ID to do online verification. And you can do online verification with your fingerprint, with the iris, with a face photograph, or a mobile OTP or whatever. So there are multiple ways of authenticating a person. And today the authentication of Aadhaar is used 80 million times a day. That means there are 80 million transactions every day where somebody in the country is identifying and authenticating himself. And this is a pure ID system. It does not do anything else. So if I use the ID to verify, that's all it does. It also, the only other thing it does is really a KYC, which I talked about. And the Aadhaar eKYC is an electronic know your customer to open a bank account to get a mobile connection. And that is used about 5 to 10 million times a day to open a bank account, get a mobile connection, buy a mutual fund or whatever. And you can also use it to sign a document. Now this was a very complex project. Issuing an ID to 1.3 billion people is not easy. What we did was, we also had a challenge that many of the people did not have any document, because in many places the birth registration was not strong, and many states had only half the children had birth certificates. So we had no document or proof of them. So we had to issue a new ID to everybody. And we had to issue a new ID which was in a way that nobody had a duplicate. Everybody had to have only one ID. Now, how do you do that? If you don't have documents, how do you make sure that somebody does not register in your system 10 times with 10 different names? And for that, we used biometrics to establish that a person is unique. And the biometrics we used were the 10 fingerprints, the iris of both the eyes, and the face. And we said that the photograph, the 10 fingerprints, and the iris of both the eyes had sufficient digital diversity to establish a person uniquely. But then that is only to establish a person uniquely. How do we make sure that a person does not register twice in our system or 10 times in our system using different names? So we had to do a very complex thing called biometric deduplication. In other words, when a new person enrolled and said, I'm a new person, we couldn't just take it at face value. We took his biometric signature, so to speak, all this information, and compared it against all the people we already had to see whether it was a duplicate or not. Now, we designed this system to enroll 1.5 million people per day, which is why we are able to get to 600 million in 5 years and 1 billion in 7 years. But when you have, let's say you have 1 million enrollments in one given day, and let's say that you have 500 million people already registered in your ID system. Each of those 1 million people's biometrics has to be compared with all the 500 million to establish that he is a new person. So that's 500 trillion pattern matches every day. So we had to build a huge distributed computer network with thousands of computers to do 1.5 million deduplications per day. That's on the back end. On the front end, we had to have about 35,000 enrollment stations where people could come and enroll, where they would give their name, address, date of birth, sex, and their biometrics. And that would be electronically sent to our data center, deduplicated. If the person was a new person, we would issue a number to them. So that's how it all worked. So that was the ID which I ran for 5 years. Then I talked about payments. India implemented UPI in 2016. And as I mentioned earlier, 9 billion transactions a month, 350 million users, and 50 million points of payment. Now, this is an interoperable network, which means that any person can have any application and pay at any merchant. So it's not like X has these merchants or Y has these merchants. It's all interoperable. And you can use many consumer apps. So the consumer app could be from, in India, we have something called Phone Pay, which belongs to Walmart. We have Google Pay. We have Paytm. We have, Bharat Pay. We have many, many companies providing the application, the payment application. And they all sit on top of a common protocol, a common layer. And behind that is your bank account. So your money continues to be in a bank account, or it can be in a wallet, it can be either, but you can pay anywhere with any app. And that interoperability of the payment system is very important because it creates economy of scale. And all this is run under the regulations of the central bank. So it's your bank account has the money, your actual transaction is on your consumer app, and it all works together. And the reason why it's so popular for merchant payments is because, as you all know, it's using the QR code. So there are 50 million merchants, small merchants selling fruits. the guy selling pens at the traffic sign, all of them will have the QR code. But the good news is, any app you have, the QR code works because of the interoperability. So the QR code may be issued by GPay, which is Google Pay, but your app may be Paytm, and it works. So you don't have to worry that do you have the same QR code or not. And that interoperability is why it has really taken off and does 9 million transactions a month. Also, our whole highway system has been completely changed with the FASTag, which is a national RFID tag for movement of trucks and cars in India. That does about 2.5 billion transactions a month and a year. And that has led to huge efficiency in our highways. I'm sure you have all that, but this was designed with an RFID tag as a modern system. And the same system can be used for parking, for congestion charges. So it's not just for road toll. It's actually a platform on which you can make multiple kinds of payments. So it was a platform approach to moving cars and trucks. And then we have something called DigiLocker, which is on your phone. And this allows you to securely store your documents, your government-issued any documents. So for example, about 150 million Indians use the DigiLocker. On their phone, they keep their driver's license, their Aadhaar details, their vaccination certificate, their graduation degree, whatever. And there are about 5 billion documents, all securely signed, encrypted, and kept on your thing and can be verified by anybody. So if you're driving a car and the policeman stops you, you can just show your driver's license digitally from your phone, and it can be verified that it's genuine. So this is also a huge system for the whole country. And then we have a system called Account Aggregator, which allows people to use their own data to improve their lives. So normally, we know that digital activity generates digital footprints, but these are used by large companies to sell to you, advertising, or governments could use it to keep eyes on you. But here, this data is with you. You can use your own data. So this is called data empowerment. An example of that is, I want a loan. I want a loan, so I can go to an entity. We have these entities called account aggregators. And I can say, go to my bank and get my bank statement. Go to my tax system, go to the country's tax system and get my tax details. Make that into a packet and send it to a lender. And the lender can make a decision to give me a loan. So this is available to everybody, so they can use their own data to get a loan. But this can also be used in healthcare. I can say, get my health record so that I can go to a second opinion. So fundamentally, this is putting data in the hands of people. It's a fundamentally different way to approach data. So this is getting rolled out now, has about 15 million consent requests. So the way to think about digital public infrastructure is it's neither government applications, nor is it only private applications. It is enabling this interoperable infrastructure at population scale, opening it up for private innovation. So it combines the scale benefits and regulatory benefits of having a government-sponsored infrastructure, but the innovation can happen by various market and other apps. So it combines the best of both worlds, government infrastructure enabled and private innovation. And obviously, it's designed for privacy and designed to collect minimal data. By the way, this presentation is there with you, and I think you can share it with everybody. So there's no need, and you can take pictures too, but you can have the whole presentation, so that's fine. So data is minimal data collection, because one of the concerns people have is if the government is providing this system, What if they're collecting all the data about me, right? That's a worry people have. So this is designed not to do that. So the ID system only does ID verification. So when a bank uses the ID system to open a bank account, the ID system does not know how it was used because it was used in the banking system. And your data is in the bank. And so the ID system is really designed not to collect information, which is a very important design principle for privacy. And data is federated. So the healthcare data is in the healthcare system. The banking data is in the banking system, and so on. So it's not all in one place. It's all in different places so that you don't have a concentration risk. And access to data is regulated. So the ID data is not available to browse. The ID data is only available for verification. So it's designed by technology, by architecture, by law to be used only in certain ways. And that's very important when you're designing these large systems. This has also helped the government to become more efficient because I talked about the fact that India opened 700 million new bank accounts, and all transfer of money to people is now done through this plumbing of bank accounts. And cumulative since the beginning, India has transferred $310 billion through direct benefit transfer into people's bank accounts, over 1 billion transactions. And this is very important because it allows you to make payments anytime. It was very useful during the pandemic because the Indian government made billions of dollars of payments to 160 million beneficiaries using this system. Tomorrow, after climate change, there's a disaster, there's some flood, tsunami, earthquake, and you want to give some emergency funding to the people affected, you can do it with this. So it's a well-designed plumbing. And because of all this, India also has built a very sophisticated tax system for both income tax and indirect tax. So everybody files returns online. Everybody gets refunds online. Everybody's tax is computed online. Every company pays the GST, which is the goods and service tax, online. So it's a fully digital tax system, all done in the last few years. And my company, Infosys, has built both these systems. And because of that, India's economy is going from informal to formal. So more and more people are joining the economy formally. And because of technology, because of formalization, and because you can use fraud analytics and AI to make sure people are paying their taxes, India's taxes are growing faster than the GDP. So in the last 10 years, India's GDP growth was 3.58x. India's tax growth was 4.06x. What that does is it increases the revenue of the government, which can invest in infrastructure or giving benefits or whatever or R&D or whatever it needs to invest. So the digital public infrastructure is not only making the people have more services, it also enables the government to be more efficient. It's also helped India's capital markets. India today is a very large capital market. India's market capitalization of India's companies, I think, is number 4 in the world today because of all the companies. Now, for many years, this depended on foreign investors. And if foreign investors left suddenly because of interest rates hike or something, it had a big effect on the Indian market. Today, more and more of the Indian market is supported by Indian investors who again use technology. They can just tap on their phone, set up an automatic systemic investment plan, and buy stocks. The whole thing is all on your phone kind of thing. So that has made the Indian markets most stronger because domestic flows are able to deal with it. So fundamentally, what I want to say is that there is a transformation happening in India. It's happened over the last 10, 15 years. It is large-scale technology, population-scale technology, very small transaction amounts, values, very efficient, which can do billions of transactions, and which covers the entire population. And it covers the whole country. So this is really a whole new way of thinking through the strategy of economic development and social development with a digital infrastructure called digital public infrastructure. And one of the reasons why this has been possible is because India has a very strong IT industry. This year, India's IT business is about $250 billion, employing 5.5 million people. My own company, Infosys, where I'm a co-founder and chairman, has a $18 billion revenue with 300,000 people and servicing 1,700 customers around the world. So like that, many companies are there, and this has provided the technological capability to build the digital public infrastructure. This is also why India's finances are in very strong position, because the software industry earns a lot of dollars for the country, and that's why India's reserves are $600 billion. India's reserves are also strong because of the inward remittances of Indians who go abroad. So India is the largest country in the world for inward remittance, $108 billion a year. So the combination of inward remittance and software export has put India's finances in a very strong position on the export side, on the international side. Also, if you look at GitHub, which is where a lot of the developers are, India is currently the third largest developers on GitHub, but very soon it will become the second largest after the US. So it's a huge place for technology. And because the experience of the people in India is building for the world, that expertise is now being used to build for India. That's the important thing. The capability, the experience has been repurposed for Indian benefit. India also has a huge innovation ecosystem, and that's become a massive startup economy. In 2016, India had 1,000 startups. In 2022, it had 90,000 startups. So there's a 90x increase in startups in India, and there's a huge amount of funding, and many, many companies are coming. And therefore, there's a massive startup economy which is also there to drive innovation. So all these three things are coming together. Digital public infrastructure at population scale, a huge talent pool created because of the global export market, and innovation through thousands of startups. And all this is creating a very vibrant economy. For example, if you look at the rights for IPL, which is our cricket tournament, which is very, very popular, years back, television rights were sold. There were no digital rights. And then slowly, if you see the blue thing, digital rights were, each time there was an auction, there was more payment for digital rights. And in the last auction in 2022, digital rights were more than television rights, which means the migration of India's viewers to their phones instead of watching TV. And this summarizes that. In 2016, people would huddle in a shop, see, it is all this Sony, Samsung, all that, to watch TV. In 2020, they watch on the phone in a matter of 4 years. And the aspirations of young Indians has changed. In 2012, IITs were all the, it's like the top engineering schools of India. And the person who came first in the exam to join IIT said, I want to be a scientist. In 2021, he said, I want to be Elon Musk. I want to be an entrepreneur. So what this means is that in the mind of young people today, they want to be entrepreneurs, which is why you have 90,000 startups. So that creates a lot of innovation. And then startups start more startups. So Myntra is one of our earliest startups. There have been 113 new startups that came out of people who worked in Myntra. Or Flipkart is also one of our original startups which was bought by Walmart. There are 318 startups of people who used to work in Flipkart. So this whole thing, startups are begetting more startups. And then because of the startups, the larger companies are facing the competitive dimension and they are coming in with their own products. So for example, Ather and Ola has launched EVs. So all the large companies that make petrol or gas two-wheelers have to move into EVs. Or Nykaa came with online cosmetics, so Tata is coming. Or Jupiter is a neo bank, so the existing banks. So basically, you are now in every sector, whether it's banking or electronic e-commerce, you have both startups and existing companies competing. So it's creating a very vibrant and competitive dynamic. So to think about it is, India is upgrading from an offline, cash, informal, low-priority economy to an online, cashless, formal, high-priority economy. And that's one of the reasons why today India is growing at 6% a year when the rest of the world is much lower. And we expect it to grow significantly over the next 10 to 15 years because of the trajectory of change that is happening. And though I've talked about this, India is also becoming a manufacturing base now, which we can discuss in the Q&A. So 3 areas that we think will change in the coming years is credit, e-commerce, and logistics. Credit, essentially what is going to happen is because of the fact that people can use their own data, which you can call as information collateral or digital capital, we think credit will expand, especially to small business. Because historically, small business did not get access to capital because they couldn't go to the banks and get money, so only the big guys got money. Now everybody can get money. So we're going to see the democratization of lending and small value lending to millions of small businesses. Similarly, the entire Indian market is becoming a single market because of GST, which is a single tax for indirect tax, electronic way bills, so you can have all your products on your truck, FASTag, which allows you to go through toll gates. So India was earlier a fragmented market of states. Now technology and financial reforms like GST is creating a single market. And then we have a very exciting thing called ONDC, or Open Network for Digital Commerce. This is unbundling e-commerce. You have thought of e-commerce as one app doing everything for you. So you order on one app, you buy from a supplier, they have listed, they deliver it to you. But ONDC has unbundled it. So you can buy from any app, buy from any supplier who is listed on ONDC, have it delivered by any delivery company. And this unbundling of e-commerce means millions of small businesses, millions of small manufacturers can participate in e-commerce. And this is already doing about 10,000 transactions a day, and this is going to grow. So this is fundamentally reinventing the way we do commerce in the world. And it has application everywhere in the world. So think about it is that just like Google, Facebook, Stripe, Amazon essentially allow digital products to be sold, we think credit, ONDC, UPI, and logistics will allow India to become a single market for products to move around. And that's also a source of economic growth. And then another challenge in India is the multitude of languages. India has 22 major languages and 300 languages or more, small dialects. Very difficult to communicate. Now, there's a project going on called Bhashini, which is essentially creating an AI-based solution for all Indian languages. So you can translate from any language to any language in real time. Voice, text, whatever it is. And that is now being made into a large language model, like GPT kind of stuff. And this will allow anyone in India on their phone to talk to the computer in their language and get answers. So suddenly you're removed language as a barrier for access to technology. And you've enabled Indians to talk to each other. So I can talk on my phone in Hindi, it'll translate in real time into Tamil, and that person can hear in Tamil, he replies in Tamil, it's converted back into Hindi, and I can hear him. Suddenly, language is no longer a barrier, all using AI. This is getting rolled out right now across the country. So to summarize, what you have is exponential change because each thing is creating something else. So Aadhaar led to bank accounts, led to DBT, Aadhaar led to mobile penetration, led to digital payments, led to data streams, led to credit, led to better taxes. So all these things have come together, which is why over the next few years, India will go from a $2.8 trillion economy to a $10 trillion economy. And this is a new model of growth. This is a temple. And Indians go to the temple and they give a little bit of money to the temple. Now they all pay digitally. So the QR code is on the idol, and you just point your phone and make the payment. So it's a sort of, you're seeing two worlds coming together, the traditional world and the new world. But most importantly, it's creating a model of economic growth, which is inclusive, which is broad-based, where everybody can participate. And that's something which we all need to look at. Thank you very much.